April Tan, Chief Equity Strategist of COL Financial. We've just wrapped up the second quarter earnings season and results from the telco sector were less than encouraging. Both PLDT and Globe posted lower profits while Converge reported growth that fell short of expectations. Adding to the industry's challenges, the BSP recently ordered all e-wallet providers to remove in-app gambling links. And just last August 24, the Konektadong Pinoy Act, an open access bill, lapsed into law. What do these developments mean for our listed telcos moving forward? To help us unpack this, I'm joined today by COL Financial's telco analyst, Paolo Manansala. Thank you, Paolo, for joining us in the show.
Thank you, Ms. April. Nice to be back.
Okay, so let me start out by asking you about the second quarter earnings of the three listed telcos because they were all three disappointing. So in a way, it was similar to the first quarter, but let's start with the two giants, PLDT and Globe. Both companies reported lower second quarter profits. So what happened to their mobile phone business during the second quarter and why did their revenues drop?
Yeah. Okay. So for Globe and PLDT, I would say relatively it's the same story from the previous quarter. We saw lower earnings and, yes, I mentioned, very disappointing expectations as well. Specifically, in terms of revenues, why we saw a decline was primarily because of their mobile business. Their mobile business inched downwards around 1.1%. During the period, we noted that there was lower ARPU, or average revenue per user. Even though there was a slight improvement in subscribers, right? So, what can we get from this? Basically, like the previous quarter, we noted that consumers seem to be strained in terms of spending or discretionary spending when it comes to the services of Globe and PLDT. When we asked the telcos why this is happening, they still gave the same reason. So heightened inflation, which led to overall decrease in allotment for these telco products or services. And maybe there's also some form of rationing of data spend in general. So with that, we saw that they were able to continue their growth trajectory. So with regards to that, consumers may be still opting for lower price services, which is hurting the earnings of Globe and TEL.
Okay, so let's now talk about DITO. Was it able to still grab market share from PLDT and Globe during the second quarter?
For DITO, if we include it with the mobile revenues of Globe and PLDT, from, as I mentioned, down 1.1%, it is now up 0.6%. So while this remains marginal, it just really speaks on the matured nature of the mobile industry, and also how DITO is able to grab the revenues of Globe and TEL because it's able to post a 24.4% growth in revenues, right? So in terms of revenue market share, it now represents 8.1%. Previously, from 2Q24, it represented around 6.5%. So yeah, during the period, I guess you could really say parang nag-switch consumers to the lower priced services and longer validity periods of DITO's products.
I see. So partly rin, the reason for the weakness of Globe and PLDT is intensifying competition and the market share grab from DITO, which is gaining momentum. No? So the last time we were together, I asked you if, investors should be buying shares of DITO. And this time around, what are your thoughts? Is it now the right time, or are you still, thinking na it's still premature?
For me, I think it's still a little bit premature. Yes, we do have growth in terms of its top line, but I would still say there's still a lot of hurdles with regards to its operations. I think as an investor, you really have to think about that, right? Like, so the sustainability of its operations. As of now, when I looked, as of 1H25, or the first half, it still has a retained earnings deficit of around 42 billion, so it's quite substantial, right? And then, with regards to its debt interest coverage ratio, it's only at 10%. So even if they're posting these large amounts of growth in terms of revenues, we still have to consider that we don't know how long can they sustain operations given that they're still at a loss.
Yeah. So in fact, they could close shop anytime if they don't successfully raise capital. No?
Exactly.
So let's now shift gears and talk about the broadband industry. So I think even for me, no, Converge was a really big surprise because, that's why the share prices went down so much. So a lot of investors that I talk to don't understand why it's a negative surprise when Converge was actually able to report a 6.8% increase in second quarter profits. Can you explain why, analysts view this as a negative surprise?
Okay. So yeah, if you look at Converge's stock price as of now, you would see that it has fallen substantially. Well, this is mainly due to the disappointing earnings. So why were the earnings disappointing even if they posted growth? Well, if you look at Converge's revenues, it was only up 10.1%. I say only because they have guided full year 2025 revenues to grow by 14 to 16%. So not only did they miss on the expectations of their growth guidance, but they also revised it downwards, meaning that they think they're not going to be
They
able to
cannot
meet
meet,
these growth guidance. So the revisions now for Converge in particular is now 10 to 12%. When during the briefing, when we asked this or asked why the lower growth guidance, given maybe a pickup in the 3Q or 4Q, they noted that certain growth from its enterprise business has been delayed to the next year, and also they're seeing some disruptions in terms of a shortage actually of manpower, leading to some disruptions with their services or installations. So nagkaka-slow down. Baka, for example, churn could rise for the subsequent quarters, and also they mention some outages that led to lower demand for their services given na there isn't the electricity or the effects from typhoons in general. So yeah, this would explain why I guess the rapid share price drop, or why there's the earnings of Converge was disappointing. Well, to put it bluntly, it missed the expectation or the premium we put on Converge. Right? So
yeah. So in other words, disappointing top line growth, plus of course you talked about higher costs, due to the manpower shortage, which meant they had to pay more for these people. So yeah, miss on the top line, miss on the margins as well. No? Okay. What about the performance of the broadband business of Globe and PLDT? Were they any better, or were they also kind of weak?
Well, for the broadband business of Globe and PLDT, like I said, it's very similar to the first quarter. It's still being weighed down by its legacy businesses. And for this quarter, we note that the drivers for PLDT is still fiber, so reacceleration of fiber. But I guess what's interesting about this quarter is for Globe specifically, they noted an increase or a rapid increase in subscribers for prepaid fiber. It noted like around 30% increase in prepaid fiber quarter on quarter. So it would be an interesting development to see. Maybe it could also link to Converge's slowdown. We don't know, but for now, I think best to say that Globe is picking up in its prepaid segment.
But yeah, I guess it's kind of too early to tell as well, because I think interestingly, even with that pickup, the revenue growth of Globe's fiber business or broadband business isn't so strong. No? Baka nga, similar to Converge, the entry into prepaid is leading to lower average revenue per user. No? So there's some offsetting factor.
While you mentioned the rapid increase of subscribers, pero the ARPU that they're getting from it is not too big.
Because it's prepaid nga eh. Oo. Okay, so now let's talk about the fintech business of Globe and PLDT, which I think is the most exciting of them all, GCash and Maya. So how did they perform in the second quarter?
starting off with Maya, it was able to post a net income of 238 million pesos, at least the equity earnings that PLDT received, right? They noted that this was due to the growth in loan disbursements, the growth in deposits, and it was also able to increase its net interest margin by 6 percentage points to 20%. So overall, I guess you could say its growth trajectory is still strong. Quarter-on-quarter basis, it grew by 68%. And yeah, so relatively strong pa rin yung earnings ni Maya. Si GCash, same story as well. It was able still to maintain its growth trajectory for the second quarter at least. It was able to post a 5.9 billion peso net income. This is 78% higher year on year. When asked, like, when Globe was asked as to what were the drivers, alam mo naman, GCash, they don't disclose a lot of
the details.
a lot of details, but it was attributed to the stronger top line, a larger amount of users kasi daw, and then a pickup of their newer services, right? Their top line or revenues increased by 50%. So, yeah, I would say both of them performed pretty well during the second quarter.
So far, so good.
So far, so good, yes.
Yeah. Okay, I think the next question is a bit controversial. So, the BSP ordered to drop online gambling links from e-wallets. Is this a risk for GCash and Maya?
To answer it simply, I guess yes. Yes, it definitely is a risk for GCash and Maya. GCash doesn't disclose, or Maya even, doesn't disclose how much gaming revenues they receive from these, gambling platforms, right? But we estimate it from we assume that around 20% or roughly 20% of their revenues come from these gambling. So we believe that a large part of their revenues do come from online gaming. With this, from previous news, PAGCOR noted that there had been a 50% drop in e-gaming revenues. So hard to believe that Globe and Maya, if they're receiving revenues from e-gaming, won't be affected from these services. When we asked Globe, specifically GCash, if they're what are their comments or like how are they approaching this, basically they noted that they have a diverse group of revenue, so they think they can mitigate it through growth in other segments.
Yeah. But between Globe or GCash and Maya, who among the two are more dependent, or I would say gets a larger share of the online gaming?
I would say GCash specifically, because GCash is the more prominent digital wallet. I mean, even Maya would say that it's more of a digital bank than it is a digital wallet. So we would expect that a larger portion of GCash's revenues, compared to Maya at least, would be from e-gaming.
And next, of course, the other controversial topic right now for telcos is the Konektadong Pinoy Bill, which lapsed into law last August 24. How would this impact the three telcos?
For the Konektadong Pinoy Bill, this is an open access network bill, right? So this allows newer players or new entrants to access the infrastructure of the incumbents, so Globe, PLDT, Converge, both broadband and mobile. So when generally speaking, the goal of this bill is to lower down prices and introduce a healthier competitive environment within the industry. So with that, obviously we would expect ARPUs to go down. So you would see that in mobile, even if it's a bit matured, we could expect further price wars, etc., given the impact of the Konektado bill. With regards to the degree as to how much this would affect the three telcos, I would say it's really hard to still estimate because with the implementing rules and regulations still being drafted, it would really depend on that. So the implementing rules and regulations is still being drafted. It will be released 90 days after the enactment, or from August 24. So yeah, it's still hard to say, but I guess a general notion would be that there are some risks for a heightened competitive environment from the bill due to it opening up the infrastructure of these incumbents.
Yeah, but between mobile and broadband, I mean, which one would be, I guess, more competitive if ever the new players come in?
If we assume that there are new players to be coming in from both ends, I would forecast that the mobile industry would feel, I guess, more of a decline, given that, as I mentioned, it's already matured up to 0.6% during this quarter, and same story from the previous ones. I would think that if a new player enters and starts disrupting prices, let's say the IRR is favorable for the new players, right? I would think it would really impact the earnings or the contributions from their mobile segment of Globe and TEL specifically. But broadband, on the other hand, if new players were to enter, they still have the growth and the exciting opportunities from prepaid fiber and fiber itself, right? So we noted that for Converge at least, fiber subscribers increased by 7%, while prepaid fiber continued to double year on year. So,
so more room for growth, at least on the broadband. So it's less scary for the broadband business. Okay, so for the last question, among the three telcos, which one is your top pick?
Among the three telcos, I would still put Converge as my top pick because I think from the bill, I think it's the least impacted given its low port utilization. As of now, Converge is in the mid-30s in terms of port utilization, while Globe and TEL is around 50%. So why does this matter? When the Konektadong Pinoy bill passes, obviously there's going to be a leasing or sharing of these infrastructure. So if it's favorable, or if the IRR is favorable to the incumbents, I would say Converge is in the prime position. On top of this, you have Converge not having the legacy businesses that Globe and TEL has, which is dragging earnings as of now. It was also able to not have the mobile business, which is also matured, right?
So intense competition.
Amid the increasing competition. So for Converge, it's in a favorable spot in its broadband segment, given that it has both fiber and prepaid fiber. And in the case that the bill does passes, well, they could also monetize from that.
So is Converge already attacked again? Is Converge already attractively priced after its share price fell following its poor second quarter earnings?
I would say yes. It could be largely overdone because with regards to EV/EBITDA in terms of valuation, it's now trading at around 4.7% from its 5-year average of around 10%. So 10x. So because of that, I think the sell-off's overdone, and as I mentioned, it's in a favorable spot right now, especially within the telco sector industry. So I think it would be attractive. On top of the fact that it also announced that it would be actively using its share buyback program. Yes.
I see. Okay, so with that, thank you very much, Paolo, for your time and sharing with us what happened in the telco industry in the second quarter. So, it's going to be exciting times for the telco industry.
Very exciting.
Given, online gambling, Konektadong Pinoy bill, and intensifying competition.
A lot of work ahead.
Thank you so much. That's it for this episode of Intelligent Investing. If you found this discussion useful, don't forget to like and subscribe for more market insights every week. And remember, stay sharp, stay selective, and as always, invest intelligently.